I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to Complete Trader Academy's Daily Review. Today is March 21st, Tuesday, 2023. So as you see here, and what's funny is I keep forgetting this new system has the time and date up here. All right, so as you see yesterday, watch previous video, I mentioned that we would come up and get into, now I thought they would have saved this for actual FOMC, but at the same time, why not for today? But it doesn't matter when the news is coming. My analysis is going to be looking for this direction anyway. So my analysis is over the news. The news is used to help move things faster. By the way, you're supposed to be, if you're looking at the Dow Jones, I know this is a US 30 chart, but I should have mentioned it last week, but you should have updated your chart to YM as in Mary, M as in Mary, 2023. So the contract changed on Friday. It's always the third Friday after every quarter. And that was March 17. I forgot to mention it last week. The whole time I'm making videos, I was supposed to mention it. I wanted to mention it. I keep forgetting. So anyways, so yeah, so the price opened up, and already by 9 o'clock, it was already up here. So already rushed for this high here and got into the imbalance here, and then got into this resistance block right here. All right, let me go to a smaller time frame real quick. And as you'll see here, on the 1 hour here, when we woke up here, and I'm looking at the charts, deciding definitely to wait for the open. Open, we had a shift. That's why it's good to always wait for the open, because you can have a major shift and it can come against you. But you see you have this 1 hour imbalance right there. So I drew that out. Price this is a great place for it to retrace and then also find support if it wants to come back up and get back into a deeper area, maybe 50% of this massive resistance block, or some of that imbalance up there, which we'll see if the news on Wednesday does that for FOMC. I don't know, but right now I don't really care, to be honest. So that being said, you have the imbalance there, and let's go into a 1 minute. Forget the 5 minute here. Actually, no, I'm gonna go into a 5 minute real quick. And then you'll see here that, so price right here, this is the 9:30 candle, peaks up, comes down, boom, 9:35 breaks down that big candle right there. It retraces back into the imbalance plus this block itself. You can have been an automatic seller right at the open of this last supply block candle. And then your stop loss is above that high of that imbalance. Now in the 1 minute, it's definitely a lot more clear. And let's take a look at that here. So I'm getting used to this mouse. This mouse is dope, but I mean, just gotta do things differently. Okay, so you see here that we had that candle break down massively on 9:35. This is a 1 minute. So break structure there. And then now you have an imbalance here, right? So when the price is tapping in, you could have been an automatic seller there, but the problem with that is that there was a lot of range here. So I'm going to be way more patient. So you see it digs in once, twice, digs in again, comes down, breaks. You thought you would have missed it, right? But this is way too big of a range. It's super eyesore, right? So generally, sometimes in an imbalance like that, they'll create more liquidity above for people selling, and then what they'll do is they'll rip it right back to seal that price. So what I'll do is I'll wait for it for at least to come to 50% of this imbalance, and then you can couple it with, okay, well right here we got 2 blocks here. So these 2 supply blocks, I can combine them or I can separate them. I could have said, okay, well I'm going to put my entry right there at the open, but you would have missed it. But if you put it at the low of that candle, okay, which is also coupling with the low of the first candle of the imbalance, See right there to the right there. I hate when they do that. Let me move over a little bit. You see that right here? So you see how it'll kind of like tap right in above it. So while that's kind of cleaning the area, getting a little bit extra of it, you're an automatic seller right there as well. And then your stop loss would be right here, or debatable right here. But see that right there is being patient and waiting for it to flow. This is a signature that we see all the time. It's our model. We sweep above, we break below, we retrace back in. Boom, nice sell. Where are you taking it to? Let me go to a 5 minute because this is too much data. And also, before I go into much detail here, you'll see that we had a shift on the dollar, and we had a divergence. So right now, when this pops up, this is now 10 o'clock. It is the 10 o'clock opening candle that comes in, and we take this entry on. So if you take a look at the dollar here, the dollar was coming down the whole time of the day, which we were going up the whole time of the day, right? So we woke up here and it was already down here, and then indices were already up in the air, right? So 10 o'clock, we have a shift right here. You'll see that it starts to get bullish here, big, massive bullish here, candles with gaps. And then sure enough, this looks like a good place to retrace, as you see it does, and kind of get back somewhere up here in the dollar. But that wasn't really the main confluence. The other piece of confluence was the divergence here. So beautiful right here at 10 o'clock, you see that the divergence happens. So we're looking at if you look at these, we have a higher high here. We have a higher high. We have a higher high on NASDAQ. We have a higher high on S&P, and we have a lower high. And where we are right at this moment, when we get to this point, we're looking at it like, okay, well, Dow Jones is a lower high, is the divergence. This is a sell. So boom, there's your signal, and you take that sell. So that's all that happening at once. When you have 3 different screens, which is nice, you'll at the least you'll be able to see these things happening in real time and make a decision like that. So anyways, then we'll go back into here. So we go back into the H1 imbalance right there, comes down, takes out liquidity there. Look to your left. We happen to be taking care of all this imbalance right here on this 5 minute, and then it taps into this block right here. So if you drag this out all the way, you'll see that it taps in. So if once I see that, and I know we're not going to just keep coming down right now, I know that we do have some left imbalance up here, and we can get a little bit higher in on the top side before we come into the downside. So that is if you go on the 1 minute, you'll see here, I don't want to make this video too long, but you'll see here that now we get order flow. So once we get down here, and we're down here, all right, and we've took sell liquidity out right there, and now we're creating this order flow here. Boom, you start to see this. You see this imbalance here, right there. Price comes down in and taps it. All right, and then again, price breaks up again, comes back into the imbalance that it made, and then comes right here, and you're an automatic buyer again. So while this is happening, keep in mind, we got a shift going on here. Look at the time is 2 o'clock. Okay, so this is now 2 o'clock. Look at this. Between 2 p.m. Eastern time, this is starting to happen. Where are we? Well, the dollar has now made all this rise, and then we have these lows here, and we assume that the dollar might continue down, but the real confluence was this right here at 2 o'clock. You see here, 2 o'clock here, the Dow Jones took out sell liquidity, but we had higher lows here on ES, and we had higher lows on NASDAQ. So that was confirming the buy right there. See that? So once that's all happening, and this is where it is for Dow Jones, I'm like, okay, I'm looking for a buy, and sure enough, there are your signals. You got your imbalance there, and you got your imbalance there, and you could have been another buyer right here, right when I think I go to a 5 minute for this. You can see this better. You'll see here that the price comes up, breaks above this high. Okay. Well, before we get to that high, breaks up, has an imbalance right there, taps in. You could use this imbalance, drag it over. This becomes an inverted imbalance, and you can see that price comes up, comes right back in it, and it holds as support. All right, so you're a buyer there again, because yes, it's already in an imbalance as well. Plus you're using this, and if you didn't use that, which is fine, price rallies back up right here, comes right back in that block, and right at the 50% level. Look at that. See that? Boom. You're an automatic buyer again right there. Price rises up. All right. And then makes an imbalance right there. Price dips into it right there. It could have been a buyer right there. See that? Then price comes back up, comes back down into this imbalance right there. Taps in as well. Could have been a buyer right there. So this is where we're at as far as the day goes. Now 80% was taken off each trade. That obviously this ran up against me, and this is still in play. But going to the daily here. So I'm trying to make this video short. So now what we have here is what? Well, we have this closed. We have the imbalance of price between the close of this candle and the high of this candle of yesterday's Monday. So there's price imbalance there. We definitely got price imbalance in this whole big candle, and we obviously have the low agenda. So what is FOMC going to do tomorrow? Well, I mean, does it reach up here? I don't know. It's possible. We could stop at 50% of this candle here, or we could tap in again and get into this here, or one of those is going to happen, right? Or we spike up and we just sink down. All right, so that's what I'm looking for. All right, you guys take care. Have a good day. God bless.